I think that's kind of what the market was trying to do in shaking out some of the newer entrants that, may not really have the conviction or maybe came in with some leverage and have been flushed out of the market. But we've created a lot more, nervousness so that we can climb that wall of worry. And so as far as I'm concerned, if this is a correction, it's probably already over. I don't think there's that much downside in the price of gold from here. And the same thing with silver. I mean, silver didn't hold above 50, but it did take out 50, which is something it never did really in 1980 or 2011. We got almost to 55. And now we've had a pullback, but we're holding 48.50, which if you told people even a few months ago silver would be at 48.50, they wouldn't be, oh my God, it's pulling back. They'd be very happy that silver was at this price.
In a financial environment defined by soaring debt, relentless money printing, and weakening confidence in global currencies, economist and investor Peter Schiff continues to issue one of the clearest warnings in the markets. The era of cheap money is ending, and precious metals are poised for a historic rise. For years, Schiff has argued that the economic system is being propped up by artificial stimulus, zero interest rates, quantitative easing, and government deficits that grow without restraint. According to him, this foundation is unsustainable, and when it finally begins to crack, gold and silver will reclaim their position as the ultimate stores of value. Schiff emphasizes that the growing instability in the global financial system is directly tied to the destruction of purchasing power in fiat currencies. Governments and central banks respond to every economic challenge with the same tool: printing money. This repeated solution comes with consequences. Inflation rises faster than official numbers admit. Savings lose value year after year. Investors take on more risk to keep up. Global confidence in paper currencies slowly erodes. Schiff argues that gold and silver rise not because they change, but because the dollar falls. Precious metals reflect the true level of economic damage long before official narrative admits it. Unlike stocks, bonds, and digital currency systems that rely on governments and algorithms, gold and silver cannot be printed, inflated, or manipulated into existence. Schiff highlights several permanent truths. Gold and silver have held value for thousands of years. They perform best when fiat currencies lose credibility. They protect wealth during inflation and currency resets. Their price movements follow long cycles, and the next surge has already begun. He rejects the view that precious metals are a fear-driven investment. Instead, he frames them as logical, fundamental, and historically proven assets that thrive when financial systems reach a breaking point. One of Schiff's strongest points is the massive undervaluation of gold mining stocks. Even as gold approaches new highs, miners lag far behind, creating what Schiff calls a once-in-a-generation opportunity. Here's why miners could explode in value. Their profits multiply faster than gold prices rise. Most mining companies are priced as if gold were still in a bear market. Cost structures remain stable while gold's value increases. When investors rush into precious metals, miners historically outperform gold itself. Schiff believes that when gold breaks decisively above its previous highs, the public will suddenly recognize miners as severely discounted assets, triggering a major revaluation. Across his analysis, Schiff warns that the financial system is running out of time. Artificial stability cannot hide structural weakness forever. When the market finally recognizes the real inflation rate and the real level of economic fragility, gold could break far above its all-time highs. Silver could surge even faster due to its volatility. Mining stocks could deliver exponential gains. He stresses that the biggest mistake investors make is waiting until panic begins. By then, assets are far more expensive and supply becomes scarce. Peter Schiff's conclusion is direct and unmistakable. Prepare before the crisis, not after it. Gold, silver, and miners are not speculative bets. They are insurance against a financial system built on debt and illusion. For those who understand what's coming, accumulating precious metals now is not only prudent, it is essential for protecting wealth during the next major monetary shift. Now, we present the clips from Peter Schiff interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Well, even, characterizing it as a pullback, I mean, we're at 3,950 as we're talking. we've only pulled back from a level that we reached for a day, right? We had a quick move up, but the fact that we're just below 4,000 doesn't really feel like it's a pullback. It's only a pullback in relation to the fact that we almost hit 4,400, which was crazy in that it only took us maybe a week to get there from hitting 4,000. So if you throw that week or two out and just look at where we are, we've gone up a lot on the year. And I think sentiment, it's interesting how such a sharp decline can turn the sentiment to get everybody thinking that this is now potentially a bear market already in gold, and that there's a lot of downside risk. I think that's kind of what the market was trying to do in shaking out some of the newer entrants that, may not really have the conviction or maybe came in with some leverage and have been flushed out of the market. But we've created a lot more, nervousness so that we can climb that wall of worry. And so as far as I'm concerned, if this is a correction, it's probably already over. I don't think there's that much downside in the price of gold from here. And the same thing with silver. I mean, silver didn't hold above 50, but it did take out 50, which is something it never did really in 1980 or 2011. We got almost to 55. And now we've had a pullback, but we're holding 48.50, which if you told people even a few months ago silver would be at 48.50, they wouldn't be, oh my God, it's pulling back. They'd be very happy that silver was at this price, and especially the gold miners. I mean, gold pulling back to 3,900 is great for all these gold mining companies. They're making a ton of money at $3,900 gold. They're making a lot of money at $2,900 gold, and that never really got factored into the price. I just think we're early in a broader bull market. I think that investors, mainstream Wall Street investors, both institutional and retail, are just finally noticing gold and deciding that they should make it a part of their portfolio. And this is after, gold is up, 11, 12x this century. The Dow is down, close to 70% priced in gold since peaking in 1999. So gold has outperformed the markets, yet investors haven't even noticed that really until just recently. And I don't think that the fact that they've now decided that gold should be included in a portfolio, whereas before it had no place in a portfolio, I don't think that is going to change because, oh my God, now gold's 3,900 and not 4,300. I think you're going to start to see more accumulation of gold from investors who never bought any. And I think the central banks that have been the drivers for the past couple of years, I think they're actually going to pick up the pace of their gold buying. I think more central banks that weren't buying gold are now going to start buying as well. So I think there's a lot of new demand coming from gold, and I don't see a lot of new supply. I mean, there's some, but not nearly enough.
Right. And one of the conversations I've been having as we're at this event is, so we are seeing this demand come in from people who are new to the gold market, and people who come to this event, people who are in gold, they're usually used to being the contrarian. So if they see the mainstream coming in, maybe they feel a little bit uncomfortable. So anything you'd say to those people?
Well, I think it's still contrarian in that now that the mainstream is dipping its toe in the water, it's still, a small percentage of mainstream investors. So I think we've got a ways to go before it's kind of a crowded trade. If you want to see, something that seems crowded or bubblicious, look at what happened in crypto. Look at the enthusiasm. This is, I think, the oldest gold conference. It's been going on for, 50 years, the Orleans conference. And there's more people here than last year, I think. But there's not 1,000 attendees. It's less. I forget, 600, 700. I was at the Bitcoin conference in Las Vegas over the summer. There were 35, 40,000 people who paid to attend. So we're nowhere near there. We don't have that kind of level of interest or enthusiasm. And when I was at that conference, nobody was worried about the Bitcoin price going down. I mean, everybody was 100% convinced it was going to 1 million or higher. But here, you get a lot of people at the gold conference. Well, they're nervous that we could get a pullback, and they're not like crazy enthusiastic that we're going to be at $10,000, $20,000 gold next year. So, I think it's still early. The people in Bitcoin they're convinced that they're early. And I was trying to point out, when you have 35,000 people at a conference, it's not early. I've been going to investment conferences. That's the biggest one I've ever been to. And so that shows you that, a lot of people are already involved. You're not getting in on the ground floor when the conference is that big.
What's going to spark the next move higher for gold and silver prices? So what would you pull out for that?
Yeah, well, we just got a rate cut by the Fed, and that didn't seem to be the trigger. I think we're going to get another rate cut, despite the fact that Powell kind of said it wasn't a lock. The markets kind of priced it in, and he kind of pushed back against that. But at the end of the day, I think there's going to be another cut, because I think the economic data is going to continue to disappoint. Now, we're not getting as much data as normal because of the government shutdown. But it's possible that they end that government shutdown and we get a deluge of bad economic data that could be a catalyst for another move up, in the price of gold, as people start to, factor that in. And the Fed, at its last FOMC meeting, announced that QT is officially ending in December. So I think another big catalyst will be the launch of the next round of quantitative easing, which I believe is coming. I thought it would have actually happened already, so I'm kind of surprised they were able to make it through the entire year without doing it. But I think 2026 will be the year that they, crank up the presses again, especially if they continue to see weakness in the longer end of the bond market. And then, of course, you do have, some court decisions, on the tariffs, on the firing of Lisa Cook. I think that could have implications for the dollar and for gold. But I think if you start to see a big move down on the stock market or something that might scare the administration, there'll be a lot more pressure. And we'll see. I mean, today, we're getting a decent decline in stocks. I know Bitcoin, broke below 100,000 for the first time in about 4 months. And, that could be a bit of a leading indicator that, people are starting to take risk off. And it may not just be crypto. It may be a broader based risk off trade, which also could see some money flowing back into gold as a safe haven investment. And I think as the air comes out of the Bitcoin bubble and people begin to question the digital gold narrative, which they should, because it's just a meme, to the extent that people wake up to the reality that Bitcoin isn't digital gold, well, then maybe they'll buy real gold instead. And so there could be a source of some extra gold buying from people who either get out of Bitcoin or, instead of buying Bitcoin, decide to buy the real gold, right, instead of some fake version of it.
What opportunity do you see there? Would you look at gold stocks, and which ones do you think have the best opportunity right now?
Well, I mean, as far as which individual ones, it's, I don't know for sure. But look, I think that gold stocks, one of the big problems they've had has been a lack of conviction in the investment community on the future price of gold. People have been very bearish on gold. And so it's been difficult for gold companies to raise capital. And therefore, they've had to agree to not such great terms to raise money. But I think as the general investment community has a more benign outlook on the price of gold, and it doesn't even have to be that gold prices are going to keep going up, just that they're not going to collapse, right? If we get, the mainstream to concede that gold's going to be above 3,000, right? That it's not going back down to 2,000 or 1,000, that it's going to be at least 3,000. Gold stocks, gold companies can make a ton of money at $3,000 gold. Forget about 4,000 where we are now, right? So if people just believe we're going to stay at 3,000, or higher, I think that's going to open up a lot of capital into the sector to help them develop their projects. Meanwhile, the projects that are already in production, they're making a ton of money right now. Especially look at oil prices at around $60 a barrel relative to the price of gold. This is the cheapest oil has ever been. I mean, if you can't count like 1 month or 2 months during COVID when oil went negative, but if you throw out that aberration, oil is dirt cheap for mining companies. And even though the dollar has come down this year, it's still relatively high. Normally, when gold is rising, you see the dollar falling. And so that also pressures their wages that are in these other currencies. But their wage costs are not going up. Their energy costs are going down. And the gold price is going through the roof. So this is a great time for these stocks because for so many years, even though the price of gold was rising, the cost of mining it was rising faster. So they weren't really capturing any gain. But now you've had such a big move in a short period of time, gold has caught up a bit with those costs. And so now there's a really good margin of safety there. So I think, the existing companies are making a lot of money. And I think what's going to happen to a lot of these smaller companies is these big companies, right, that are now gushing cash, that have underinvested in exploration and development over the last decade. Now they have all this money, rather than gambling it on exploration projects, I think they're going to go shopping and start buying up some of the exhibitors that are at this conference. So I think you're going to see a lot of M&A in the space, and that's going to be good for all these companies because all of a sudden somebody comes in and just pays double the market price to buy the stock, and they still look at it as a good deal. So I think it's a great time, I think, to be in the industry. And the fact that there's not even more excitement and more enthusiasm here shows you how early this is. That anyone says, oh, we're at a top, right? This is not what a top looks like. Again, I just came from that Bitcoin conference. That's what a top looks like.
Yeah.
So nothing. When there's 35,000 people at this conference,
we're not getting a new hotel. Yeah.
Maybe,
Maybe.
Peter Schiff warns that the global financial system is becoming increasingly unstable due to excessive money printing, rising government debt, and artificial economic stimulus. He argues that fiat currencies, especially the US dollar, are rapidly losing purchasing power, even as official data tries to hide the true level of inflation. According to Schiff, gold and silver will rise not because they change, but because the dollar weakens. He describes precious metals as real, immutable forms of money that have protected wealth for thousands of years and thrive during periods of monetary crisis. Schiff also highlights a major opportunity in gold mining stocks, which remain undervalued despite gold nearing new highs. He believes miners could see explosive gains once investors recognize the true economic risks and rush toward hard assets. His core message is simple: prepare before the crisis, not after. Gold, silver, and miners are insurance against a financial system built on debt, illusion, and weakening currency. Those who accumulate precious metals early will be better protected when the next major monetary shift occurs. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.